Thank you, crew. Hello, Dennis Geekus. I haven't seen that name for a while. Katie, welcome back.
Thank you, Dale. Good morning.
So glad to have you back, Katie. You want to share your screen? I love your technical work, and I also want to tell you I want to congratulate you on fine spot you did on CNBC last week talking Chipotle. You're bullish, so I assume you and all your friends and family were eating at Chipotle this
There you
weekend.
go. It's got
Huh?
yeah, eating the book, right?
Yeah, well, you really, you were really good on television, Katie. So,
Thanks so much, Dale. Yeah,
if you want to show your photo, we could pretend we're on TV.
yeah, there you
Anyway, all
go.
right. So, I was asking the question before, and it looks like you're going to be answering it. I thought last week's action, I do a thing like a 2-week reversal if we close under the prior 2-week close. It's somewhat meaningful, and we had one of those in S&Ps last week. What's your work saying here? We're bouncing today. Is this a rip to sell, or was this just another, harmless little pullback that just was another 2-3% pullback to buy before new highs?
Yeah, it always feels so much worse, doesn't it, than their percentage decline would indicate. I mean, that the
Yeah,
S&P 500 is down 1.7% as of last
right.
week, and the Nasdaq 100 index, despite a
Up.
3.5% down day,
Yeah,
in Apple, it was
yeah,
down
was mainly.
1.4% on the week, right? So the
Yeah,
very modest pullback here. And what that has done that's been constructive is that this overbought reading, if you can hopefully see this on this
yeah,
stochastic oscillator,
we do.
has been relieved, right? And notice where past pullbacks have held, and it's not an oversold territory. That would be going back to May, that we'd have to find that last real oversold reading. But you're getting these upturns, and these upturns have been great little short-term buy triggers. So we
Right.
don't have that as of yet. It usually happens with a lag of a day or two in terms of the actual tradable low. So we can't be convinced that this pullback has totally run its course. But what's good is that we've seen that relief short term from the overbought reading, and that's happened well above
The
the initial
cloud.
levels, the cloud,
Yeah,
and even the 50-day moving average, which let's call it about 44.25. The
yeah.
cloud is a more important level in my work, and obviously both are very much intact. And
43.50 would take it back underneath the cloud, Katie. Just
yeah, and
curious.
it's a moving target. Let's call it 4,300 as it
Oh,
stands. But
okay.
looking out a couple of weeks, we're talking about 43.22. So that level is important to me. But what's also very important is that we still have the trend following gauges pointing higher. So that this is the MACD indicator on the daily SPX chart. You can see it has a sell signal. It could be certainly worse than it is. But we also like to adhere to this 20-day moving average, this blue line here. And generally speaking, as long as it's kind of pointing higher and hasn't rolled over, we're in
Okay.
pretty good shape. So it does say we need a bounce, today, tomorrow, the next day, really, to preserve that uptrend in the 20-day moving average. So that's another risk metric that we're watching. And as it stands, it's still reflecting the momentum behind the market. So no
Okay.
big structural issues as of
So,
yet.
so here's how I see things in relative strength terms. Actually, the Russell 2000 still hasn't made a new high. There have been several attempts, so I would probably rank that as the weakness. Although the transports don't look good, but I mean the big averages. The Dow actually, and I know it's only 30 stocks, but took out an uptrend that it was in. So the Dow seems to be the leader right now, followed by S&P and NASDAQ still. Let me ask you this, Katie. I'm interested in your reaction. A lot of people buying the mega cap tech growth
Mhm.
stocks, and the reason it shifted from earnings and everything else to it being they're safe stocks because if there's any problems with COVID, they still have earnings, they still make money, and if the economy improves, they'll
Mhm.
even make more money. So um, I kind of get this queasy feeling in my stomach when I hear an oxymoron like safe stocks. Do you think that people are, too sanguine about what's happening in the FANGs and MAGAs? And do you think Apple is just an isolated part of it, because there are some other parts of FANG and MAGA that aren't doing great, like Amazon? Amazon had that terrible earnings report, Katie, and we haven't been able to fill the gap. We've eaten into the gap, but looks like we may not fill it. So I'm interested in your take on that.
Yeah, I mean, the FANG stocks, plus Tesla, have really outperformed over time and even more recently. So I don't see any real problems there in terms of their trend. When we see that this kind of outperformance, especially from Apple, well, a retracement of some level is inevitable, right? So I think that that's what we're seeing from Apple. Here is the ratio of the FANG plus Microsoft, in this case, stocks to the S&P 500. This is the run up that we've seen. So to see some kind of pullback, I mean, that to me is fine and somewhat of a natural development. And just to keep it real with the FANG stocks, here's your trend. Still has long-term momentum. So really no issues there. Facebook looks great. Netflix has a major long-term breakout. It's Apple, Google, and Tesla that have some issues based on our trusty Demark indicators. And I'll show you on Tesla because it's timely and is something that people might start to worry about. But I want to, suggest that they probably shouldn't worry. And it's in part based on the fact that we've seen that outperformance, but Tesla got overbought, and it got overbought near a key Fibonacci retracement level. So here's the Tesla daily chart. If you take the Fibonacci's, it's right up into this 61.8% retracement, which puts resistance around 762 to 763. And then for those of you who are familiar with the Demark signals, this is a sell signal, and it's really the first one that we've seen since Tesla bottomed in May with most of high growth. So it would be very natural and healthy to see a pullback come into kind of this zone, and that would not damage the intermediate term uptrend and the chart at all, but it would relieve this short-term overbought reading and downturn. So I just think we have to keep in mind that pullbacks are sometimes necessary evils and not necessarily the start of something much worse. Well, what we're watching more is like a risk metric more broadly. And in our morning note, actually, we acknowledge the seasonal influences that are so weak in September. And that's a real phenomenon. But to me, it's much more important to have an understanding of where the trend following gauges stand, where momentum stands, because that's real, right? That's price. And one of the risk metrics that I think is easy for folks to watch, and it's sort of a circle back to your question about sentiment, is the VIX. So the VIX is a transactional gauge of market sentiment. It's not telling us anything, bearish right now. Where it starts to do that is when you see the VIX clear 25. So this is what I've been watching. Here's your kind of low volatility regime. This is on a weekly bar chart of the VIX. Clearly no reversal of that. But if we were to clear these highs around 25, that's where you start to think about perhaps we're entering into a higher volatility regime. So I think that's one good, easy metric for folks to watch.
When you look at the VIX chart, Katie, does it, look to you like, it's kind of strange how we have these days where it looks like you have a breakout, you have huge moves, 18 to 28 in 2 days, 3 days, and then gives it all back up in a few weeks and then tries it again, gives it back in a few weeks. It's almost like there's some instability in the structure with the way, to have those moves happen in 2-3 days and give it up. It's almost like the market feels like it could be vulnerable to higher volatility, but someone's stepping on it every time it gets up there. What do you think?
Yeah, well, I think of it as almost like an EKG or something rather than like a trending.
And it's not in a coma, okay? That's for sure, right?
We'll see if it at least comes out of this little short-term coma. But you're right. I mean, the volatility spikes, if you will, last typically no more than 3 to 4 days. And that's just something, listen, that's its nature. So we want to be respectful of that. And that's why when we do see these little shocks, right, that's when we don't want to panic. In fact, I'll give you another metric to watch, which kind of has this character, but it's more off the radar, I would say. website from folks. This is called the McClellan Oscillator.
Okay.
And it's a gauge of market breadth rather than sentiment. It's derived from advancers and decliners. And, it's another one of these things you can't look at as a trending instrument, but when it gets down into oversold territory, it's been such a great indicator of tradable lows in the S&P 500, especially year to date with this kind of tape. So it's wonderful to find an indicator like this, and perhaps it will lose some of its value when the environment changes, right? But when you have these very clear lows associated with lows in the S&P 500, that can be invaluable. And if anything, it's certainly leaning more oversold. You can see that in the stochastics.
You have covered the dollar before with us, and there is a very big debate between bulls and bears on the dollar right here. I would love your view and what you're seeing here. It seems like the dollar we had this pullback, but it didn't do anything wrong. What are you thinking in Dixie?
Well, I think this isn't lost on anyone that there seems to be some kind of double bottom formation here, right? It did hold support. To me, that was important from a very long-term perspective with these tests down here. And yet it just can't push through this resistance that defines the double bottom. It's around just above 93.4. And not until that happens can we suggest that it's really a lasting bullish reversal, noting also that the cloud model suggests that this downtrend is still in force. So we don't have any kind of confirmed reversal yet. We have some indications of that from a long-term perspective. And probably the best, most obvious is on this monthly chart. You see the monthly MACD having crossed up. And yet not until we get some kind of breakout. Yeah, it's a big deal. It had been on a sell signal since May or June of last year. So that's
a big deal.
Yeah, it's an important shift, but with that 93.4 still intact, we have to just assume a neutral trend has a hold until it proves us otherwise. I think that's usually what I'm going to do.
I have a question. The first dollar chart we looked at, it's obvious what you do when a market is underneath a cloud and rallies to it and gets rejected or pulls back to it and then rallies again. How do you treat a market like this that is in the clouds?
Yeah, when it stalls near the lower boundary, that tends to be a weaker trend, and it did not do that. So that's one takeaway. The other takeaway is that this is a pretty thick cloud. So theoretically,
it sure is. It's a cumulus nimbus.
Yeah, there you go. Well, that to me means that it's a little bit tougher to surmount. And I think we've already kind of seen that it's really kind of struggling in here to hold on. The upper boundary is now the next resistance according to the cloud. It's not that helpful because it moves so dramatically over time. So we're using other gauges, as you've heard. But it does suggest that that's just hardly in the clear, and not until you do clear that upper boundary, and maybe it happens towards the end of the year, right? Can we really suggest based on the cloud alone that it's reversed? But we do have those indications from the monthly MACD that that's the direction it's going. But from a short-term perspective, it just can't get out of its own way. It's really, I call this backing and filling when you just get short-term volatility, but real sort of sideways action overall.
How about yields, Katie? Is that a strongly neutral rating here? I thought we were going to have a breakout in the 10-year last week over 136 and it backed off again.
Yeah, I like that, strongly neutral. So it's come off an intermediate term oversold reading that occurred back in here. So we're here too watching the cloud. This is a daily chart, and the cloud you can see is very well defined resistance 138, pretty well aligned with the recent highs. So that's where we have a reversal of this down move going back to the March, April highs there. So that's what we've been calling for. Reason being, when you take a sort of zoom out and look at the weekly chart, you can see here's that oversold reaction, and then look at the weekly cloud. It does show some good support, and it suggests that this uptrend that began back here, albeit very gradual, is still in force. So we're ultimately expecting a reversal.
You're expecting higher yields.
I am, and I think if we get through that 138, the level to watch is about 153, and it has twofold significance. You have this previous low in here, and then again here we can draw a Fibonacci retracement level that aligns very, very well with that level. So about 153 becomes the next resistance. I'm earlier this year, I was looking for a higher high versus that 1.8-ish level. And that's no longer seeming like it's possible. But certainly you could see it coming up close to these highs by year end.
Okay. Yeah, I think it measures the formation if we close over that resistance, about 160. Is that what you said you thought we could get to?
Yeah, so the 153 level,
Okay,
once that's
53.
yeah,
Okay.
153, but once that's clear, then the targeted level does become this 177 high. So
Oh,
I think
okay.
it really depends on how it trades around 153, if it can get through or not. And we're pretty fluid in our analysis. We'll just listen to the market as it unfolds.
Do you follow miners?
We do,
Because
yeah, we do.
the bullion has been much stronger than miners. I was always taught that in a bull market, the miners should be outperforming the bullion instead of underperforming. So they still look pretty ugly to you.
They do, and we watch. Newmont, of course, is a great bellwether in the space. And here's the gold miners ETF. It's GDX.
Yeah,
Look at this relative strength versus the S&P. You
yeah.
really can't make much of a case for it there. Yes, it's oversold, but for outperformance, not so much. And then look here with this just last week of trading, it's coming down through the bottom of the cloud. So as much as we like this kind of setup in the weekly stochastics and probably get some kind of relief rally here, it just won't be something that we can get on board with longer term until we see better price action out of them.
How about oils?
Yeah, the oils we're warming up to them. Let's put it that way.
Okay.
We have, a corrective phase still is underway, in our opinion, in crude oil, but it's trying to push out of it. We had the kind of ABC corrective wave. And what we're watching in the names, the energy stocks, is that they've largely come down to oversold territory from an intermediate term perspective. And even here and there, we're starting to see some downside exhaustion per the daily Demark indicators, meaning short-term oversold readings are giving way to a little uptick. So some early indications that we're going to get a turnaround here. But I say early because we don't have breakouts. We don't have these 20 days, turning higher decisively yet for the most part. So we're starting to warm up to it. We were underweight and we've moved to equal weight, and we expect probably within the next couple of weeks to move to an overweight bias.
Okay, so I assume you're probably following natural gas issues too. Is that a similar picture or a more constructive picture to the oils?
Natural gas, it's funny because you'd expect names like an EOG, which actually is a pretty good looking chart, or the MLPs to be doing better. When you look at this natural gas chart, it's really accelerated to the upside, and you can see it doesn't matter which one we pull up, but this momentum is really very strong here. But we looked back, and we mentioned this in one of our morning notes recently, that it does have these seasonal spikes at time, and they tend to end in November. So, for what it's worth, it could be a relatively short-lived up move, something that gives way to a big retracement. But if you look on a very long-term basis, it is pushing through some pretty major resistance back here. So perhaps that retracement comes from higher levels and then also yields a higher low. So I do think it's potentially a long-term turnaround. You can see this MACD is really looking much better than it has throughout this big sort of range-bound environment for nat gas. And if anything, I would think that would be a positive for the company.
Yeah. And just the arbitrage between here and Europe, I think they pay $15, wow. $16 for what we're paying $5 for right now. There's also a lot of exuberance about what's been happening in aluminum and also uranium. As uranium comes into focus about it is clean energy, could be part of the green solution as long as they don't melt down. So
yeah, I mean, there's some really good action out of these metals, right? I mean, again, if you look at aluminum on the LME chart here, look at this monthly MACD. Wow. And again, you can see a pretty big potential breakout. I would call it an unconfirmed breakout. You have this resistance that's been cleared decisively. It's not free and clear of resistance, but as you know, the farther back you have to go for these highs, it's like the less impactful that resistance tends to be. The market's memory isn't always that long. So I would say that the developments here are positive long term.
Okay, I know that your shop is very technical, but I also know that you guys also put a lot of weight on fundamentals. Where is your shop on the supply chain disruptions that we're having that the Fed believes will be, make inflation transitory? Do you see these, supply disruptions with semiconductors and aluminum and almost everything with intrinsic value is harder to get, even ordering things online? Nowadays, a lot of people, a lot of stores, you'll order it and then they'll say they can't get it. Your shipment will be delayed. What's happening in ports of ships being, just sitting there, waiting to unload. What are your thoughts of, this is the first time I think we've seen it happen in our economy to such an extent. Is this something that really is going to be a driving force behind the economy, with shortages creating higher prices? And a lot of it has to do with the supply chain, not that there aren't supplies.
We actually don't do any fundamental analysis of it.
Oh,
Yeah,
okay.
and we're grateful for that.
Yeah, I don't blame you.
We trust the experts on that front, and it sounds like,
Okay, the reporters.
well, yeah, not the reporters, the analysts out there.
All
But
right.
I mean, everything you say makes sense to me. And listen, I feel it myself. These supply chain disruptions. We're trying to, build a pool, and we just can't get the equipment. So there's a
Or
lot of
the
things.
workers.
The workers are, well, yes, they're available, but it's not in the way that it was, right? I mean, it used to be so much easier. So I think in terms of my personal experience, we're feeling that certainly. In terms of the market impact, we just kind of ride the trends, right? And irrespective of what the Fed is thinking or doing right now, the market still is quite happy, in terms of the momentum. We're just not seeing any breakdowns from a bottom up perspective that look meaningful to us. And that's what, when people say, well, what's going to make you bearish? And it's not even just watching something like the VIX, it's in our bottom up work where we're looking at the individual charts. And when we start to see things like 50-day moving averages taken out on a broad basis, or declines below the cloud, we're just not seeing that. And the semis are a great example, I think, of that, where if anything, we have a new momentum buy signal here. This is SMH. And you see this weekly MACD had been negative since March, and it's just getting this buy signal with a breakout to new highs. So this is another one where it's hard to make any kind of bear case around it. And even with the relative strength, especially as of last week, you can see it's really kind of picking up its head in relative terms. So the perception for these stocks in particular seems to actually be really improving.
Okay, and Katie, what's the best way for people to subscribe? Do you have any trials for people to check you out? Or
of course, yeah. I mean, we're more than happy to offer 1-month trials to anyone who's interested, and we have, I guess it's 4 research reports, including cryptocurrency work that we publish. We publish, I think, a total of close to 8 reports per week on primarily U.S. equities, but we always touch on things like gold, the dollar, 10-year treasury yields, as we pulled up earlier, sector relative strength, technical themes, market internals. We really try to create sort of an episodic story of the markets and how people should position from a technical perspective with that in mind. And the website's the best place to go for signing up for a free trial, because
you want to show it?
Yep, we can do that. Bear with me here.
They don't let you do that on CNBC.
I appreciate it. So it's fairleadstrategies.com. And if you go, you can find all sorts of information and our recent media for those that are interested in the CNBC appearances. And here, this request a trial button allows you to put in your information. And I think you'll find that the content's very much institutional in its quality, but very much accessible to even someone who knows nothing about technicals. So,
Okay, Richard Adams is saying, I love the texts from you guys. So,
oh, good,
yeah,
good to
nice.
hear.
Yeah, so thank you so much, Katie, for
Of
giving
course.
us some looks and some ideas. And I hope you have a great fall trading season since it's upon us. And we'll talk to you in a few months. Good
Sounds
hunting.
great.
I hope that all your ideas work and that the ones that don't, you get away as clean as possible.
Same to you, Dale. Take care.
All right, Katie Stockton, everybody. Thank you very much, Katie. Hope you guys enjoyed it. Katie, you could tell by her demeanor as a disciplined person when it comes to her technicals and the company's technicals. So, talent. I know it when I hear it. So you're welcome, Monica. See you guys for Turnaround Tuesday. You could join the team in 18 minutes on the Morning Edge, and we'll see everyone. I'll see everyone tomorrow with the rest of the team. So don't just count your individual issues and equities or your cryptocurrencies or your bullion coins. Count your blessings. That's right, Sinatra. And we'll see everyone tomorrow. Adios. Thanks again, Katie.